Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. I'm with Ireland Como Lafoy Grain Marketing. Let's get into what happened in markets today. Canola was up $7.20 today to 648.50. Minneapolis wheat lost a dime today at 551. Kansas wheat lost almost a dime, 9 cents down to 529. Chicago wheat down seven and a quarter at 540 and a half. Soybeans gained 13 and a quarter cents, although there was significantly more gains on the board at certain times during the day. Actually, it was a pretty wild day in soybeans today. Closing out at 11.07 and three quarters. Corn was down 3 cents today at 430 and a quarter. Bean oil was down half a cent to 50.01. We haven't traded south of 50 cents in a while, so we'll have to see what happens tomorrow there. Canadian dollar was down 21 points at 71.52. Again, that's coming off of recent highs after the Bank of Canada cut interest rates, which got up to about 72 cents. Live cattle were up 20 cents today per pound or per hundredweight, sorry, to 231.10. Feeder cattle were up 65 cents a hundredweight to 327.90. All right, let's get into what has happened in the canola markets today. This is a 5-minute chart. I just like to show this because it kind of shows what happened during the day session. It did some different things than soybeans did, and soybeans were the major headline. Of course, we've been talking about beans ad nauseum for a number of days now. So we thought we'd start with canola today. But you could see in the overnights, we saw some gains, but right into the open, some losses, but they climbed out of those and actually closed near the high of the day, right close to, some of the biggest volume was done right close to the end of the day as well. That's a good sign. It did track very closely to soybeans. We'll show you that in a second here, but there's some semblance of trade optimism coming into the canola market as well, or at least partially. So there's a meeting scheduled with Prime Minister Carney and Chinese President Xi Jinping. They'll sit down with each other to recalibrate a relationship between their countries at a time when the United States has pushed Canada into the sidelines of trade negotiations. The meeting will take place on the margins of the Summit of Asia-Pacific Economic Cooperation in South Korea. According to a senior government official, it will be the first time Canada and China have a substantive discussions between their top leaders in the last 7 years. Carney was quoted as saying, "We will explore what we can build on. This is our second largest trading partner. This is the second largest economy in the world." Carney did tamp down some expectations that there would be some sort of agreement signed between the two countries, particularly when it comes to lifting Canadian tariffs on Chinese electric vehicles. But the meeting is designed to kind of deepen the relationship, so Carney says. So again, it's a little bit different as far as trade optimism. There isn't likely a deal that's going to happen that will result in the tariffs being removed from canola. But the fact that Carney and Xi Jinping are talking may have elevated the canola market a little bit. We're also seeing some seasonal stuff happen in the canola market. Here's an article that was published by Markets Farm by Glenn Halleck, who outlined a conversation he had with David Derwin of Ventum Capital, which, some of you know this guy, you work with him as well. So David talked about harvest pressure on canola being over, that canola could track higher until spring, although he cautioned that there would be some rough patches along the way. Soybeans have supported canola in recent weeks as the optimism around the trade agreement between China and the U.S. Has been priced into grain markets. Some of those bumps that David might be talking about come from Australia. Australia is due to load what is believed to be its first cargo of canola bound for China since 2020. This move could reopen a significant market for Australia's major oilseed. The Australian government's Department of Agriculture indicated the cargo is part of a trial with stringent phytosanitary requirements. If this cargo does pass those pretty strict grading factors, this could open up the door for more Chinese purchases of Aussie canola, kind of keeping them out of the Canadian marketplace for a little while longer. China bought about 60,000 tons from Australia in August of this year. There is some rumors that there's more purchased as well. Let's look here. Another positive input for canola is February Euronext rapeseed. It did close yeah, essentially unchanged from yesterday. But as you can see, two pretty strong days here that we've seen in Euronext rapeseed. That's supporting our canola price as well. So let's look at what the canola looks like from a daily standpoint. We showed you the 5 minute chart before. You can see that we've now cleared nicely that 50-day moving average. You can see that the 20-day moving average is coming up uh, to cross that 50-day moving average. So if we continue to see some strength here, that may happen. We're also getting pretty close to this resistance point here, which would be the middle of September high at around 660, and then that 200-day moving average is tracking right along that too. So there are some positive things happening in canola. It's kind of hit the bottom now in September, or at least what looks like a bit of a saucer bottom here into the end of September and beginning of October. Seasonally, this is a good time for canola. We usually see a rally before Christmas. There are a significant amount of headwinds, as we mentioned, which, number one, the Chinese tariffs, number two, big yields. But what's interesting today is that canola had been lagging soybeans for quite a while. Soybeans had been the major headline and had seen most of the gains. But today, canola tracked right along with soybeans. As you can see, we got 1.2% on the front month, 1.12 on the January, which is the most liquid at this point in time. Those track very closely to what we saw today in soybeans. 1.2% gains in soybeans after the announcement that China was going to resume buying U.S. beans and that a trade deal had been done between President Trump and President Xi. So here's what the soybean chart looks like today. Good gains today. We saw it top out at about 11.15 or so. There is a resistance point up there. I'm going to pull back this chart to show you that in a second. We did see some very wild trade. We saw it trade down to like 1070 this morning and then again back up about above 1110 earlier. So it's traded very much inside of that range, but still one of the larger days of gains that we've seen thus far in the market. So yesterday was, kind of a buy the rumor, sell the fact. Today, it advanced on some of those facts. So a good day for soybeans. As we pull back, this is the daily January. You can see that we tested perfectly that resistance point from almost a year ago, or a little more than a year ago. Middle of September was that previous high. So it looks like a real nice, clean test. But again, this is the daily going back to January. Back in September of 2024, the January 2026 meant very little to the market. So if we kind of pull that back and look at a weekly, you can see that we've bested the August, or this is the September high here. And so we've actually bested that from a weekly nearby perspective. And we actually have some room now to run up to the June 24 highs that we saw that were above 1250. So there is some air up there, so to speak, to move this from a technical standpoint. If we do continue to see Chinese purchase of soybeans, our bias is still that it should be positive to the marketplace. At some point, it may get overbought and have to correct a little, but it doesn't. It looks like the market is still a little bit tepid on whether or not this is actually going to happen. The market's a little bit tepid on how much business was actually lost from the U.S. Or of U.S. shipments during a key time. So that will all factor in. But overall, I think if we continue to see Chinese purchases of U.S. beans after today, that will be continue to be a positive. If you haven't subscribed to our premium content, please do so now. You get morning analysis, you get weekly in-depth reports of fundamentals and technicals and other things, and you also get timely and actionable information on an ad hoc basis through our hot takes, as well as through these videos. And we send these videos to you directly to your inbox. We send all of that content directly to your inbox. Also, if you haven't subscribed to our YouTube channel yet, hit that subscribe button. We'd really appreciate it. All right, let's get into some of the stuff that maybe not be so great today. We saw a big pullback in the wheat markets today. Here's HRW. We saw again almost or 9 cents in losses today in the HRW, and we also saw that kind of loss in the spring wheat as well. So actually, the spring wheat losses look a little bit worse, considering that there was less gains that were seen through this period of optimism with China. So we're kind of pushing back now below the 20-day moving average and back towards previous lows. So December spring wheat still looks like a bit of a dog. But one positive factor is we are seeing the elevators bid up for wheat. We've seen bids, premiums above posted bids by 20, 30, sometimes even 40 cents a bushel. And you can see here that even the posted bids have been rising as the futures have been falling in order for elevator companies to keep up. Now, weekly exports have been really strong, and this is one of the reasons is that the primary elevator system isn't super flush with wheat, and exports have been pretty good. So they're drawing down on supplies. They're trying to incentivize delivery of wheat, and there isn't a whole lot of prospects for canola exports right now. So it's all just kind of working together. And what we're seeing in losses in canola, as far as exports go, we're seeing in an increase in wheat exports. That's all we have for you today. Thank you for joining us. We will see you again tomorrow. We hope to see you again tomorrow. Sometimes we don't get to our Friday video because we do our weekly report on Fridays. So until next time, we'll see you again.